What's up, everybody? Welcome back to my channel, Earn It, Save It, Invest It. In this video, I'm going to break down if I think the stock market could be crashing soon. It is time for bad seasonality. It's in the fall. So I'm going to just quickly go over if I think the market has a potential to crash a little bit. And if it does, and what I think it will do, how much will it go down? So I'm just going to go over that really quick and what the market is kind of looking at. So yeah, let's just break it down really quick. This is my portfolio right now. I'm doing a challenge, Road to $100,000, where I'm taking $7,354 and turning it into $100,000. I'm trying to find some good stocks. If you guys know anything, please comment any stocks that you know that could do really well, and go ahead, like and subscribe, all that stuff. But yeah, this is my portfolio that I'm working on currently. My Road to 100K HIMS went down and FUBO went down. HIMS I've just been holding on to for a little while. I'm not going to do much of. I put in about $1,000 and now it's at 2,600. So I'm up 151%. TQQQ I'm up 136%. So those are my big gainers right there. FUBO I believe is going to surpass all of these by far eventually. I'm only at a 25%. It went down 6% today. I bought some last week, a little bit more, like 430 or something like that. But that's fine. I already knew. I knew the potential of it going down was, right around the corner. But I still bought it anyway, because that's the whole point of this, is to be buying as much as possible, buying every week, which I think I'm going to buy 10 FUBO. It'll put me at 250, which is a good portion. I'll be just at about $1,000 of value. Now that is up 25%, so technically I'd be that's like $800 or something like that, right? 825 bucks, somewhere around there that I had initially bought in. So 250 to 300 shares would be good. Then I need to start piling onto Amazon a little bit more. But after that, honestly, I'm going to be pretty evened out. Like I said, I might even start selling a little bit of HIMS. Maybe when it hits almost 60, I might sell about 10 and go to 40. So then I have a little bit more cash to play with. The thing is, I just don't know if that's going to be able to happen in the next few weeks or anything. This is what I'm looking at when it comes to the market. It's weird that the bulls never change. Now, this is the AAII sentiment. So this is the American investors, like how they feel, about the American stock market. And what's crazy is we went from 28 to 41. That is a huge jump. 28% of people feeling bullish about the market. Then we went to 41% about people feeling bullish about the market. And then the next week, this week just came out today. Well, yesterday, it's midnight right now, Thursday. But on Wednesday, they released it, and it was the same. 41.7. Now that's pretty crazy. Not only the same percentage point in terms of the whole number, right? The 41, okay, yeah, but the decimal, right? It didn't change like that. It did not change. The only thing that changed were people went from less bullish or less bearish, right? So now there's people less bearish, but they did not go to the bull side. Anyone who said, you know what, I don't think the market's going to crash or anything, but I also don't know what it's going to do. They just went straight to neutral. So that's a little interesting. That is what happened. Let's see, this week's special question: where would you put the odds of recession occurring by the end of this year? Unlikely is all the way up there. Higher than typical chance. So you have the extremes, right? The unlikely, and then you have the, I guess the highly likely would be the more extreme, right? But a higher than typical chance. So people are thinking, God, well, why did I even put that? Just anyway, people, it seems like they're not really too concerned about a recession happening by the end of this year. I'm not either. This greed, this is the CNN Fear and Greed Index. Typically, if you see that we're down here in the fear, that's the time to buy, even though people are fearful. If you've ever heard buy when others are fear, or be greedy when others are fearful, and be fearful when others are greedy. So we're in a little bit of a greed territory, but not too much. We needled up a little bit, and then we started going down, and that's why I said I think we'll be hovering around here until we start seeing the market really kind of dip. Then of course we're going to go into the fear, but we're just going to stay right here. I don't think we're going to get too greedy, even though I would say the stock market looks a little more greedy than what this needle says. I think we're going to float in this area, just in this area, and we're going to be there. And this is what I think is going to happen to the market. I got to change my screen here. All right, so these are my, I call them the triangles of opportunity. This is the QQQ, and these are all 10% or bigger drops in the market. So essentially, when we are going through a pretty big dip, those are opportunities, right? This whole triangle right here was an opportunity back in 2022, early 2023, right? That was all an opportunity. Now, it doesn't mean that you didn't have the chance to almost hit that same opportunity, right? Earlier this year, we had a huge crash with the whole tariffs and all this, and it just, everyone freaked out, and it dipped almost to where you could have bought at the top, right at the, what is this, in November of 2021. So you could have bought some stocks that were the same price as they were 4 years ago, before the 2022 big crash that we had. But anyway, these triangles represent, a downward of 10% or more. Then this is our way back up to, go to where we hit that all-time high. I try to kind of do the all-time high, even though here you can see kind of peaked up a little bit, right? I still count it as the all-time highs when we really started to do that move. So I've calculated since late 20 right here, right? This was a very long, not a drought. This was just significant. If you were owning stocks in 2017, you were very, very happy. You just went up the whole time. But over here we had a 10%, 11%, and a 23%. These are actually I made these because I think 2018 and 2025 actually look very similar. Except we already had this, right? We had a 30% drop, I think, somewhere around there, 25 to 30%. This was 23%, but this is how we ended our year. And it started in October and went all the way up until Christmas. Typically that doesn't happen, but again, just because it typically doesn't happen doesn't mean it won't happen. But we already had that one. Right here, you can see it started in January a little bit. We had a double dip, and then over here, the end of March, but the bottom was April. That's exactly when the bottom for us was the beginning, the first week of April. And then it just continued to go up and up and up and up, right? And then we had a big crash, and this was 2018, Trump's first term, right? And this was his second year. This was his second year in office. So the first year, 2017, he couldn't do much. He didn't have much power. He's just a businessman trying to do business deals type of thing, right? Better for the businesses, right? The taxes, all the regulation. But year two, he was able to get a little bit more done in total in terms of policies and other stuff like that, and kind of shaking up the market. And that's when things started to go a little crazy. But again, we had this big double dip in the beginning, and then we went up, and then we had a huge crash. I think it can actually flip. We already had the big crash in April, well, it ended in April, and now I think maybe beginning of October, we could end up seeing a pretty big, significant crash. But because I don't think it'll be as big as that, right, 23%, it'll be maybe 10% to 15%, maybe 10 to 15%, maybe, right? So it won't be as long, and it won't be as sharp and harsh, right? But I'm looking at all these. I'm looking at these triangles, and ever since, we hit this in 2018, all of these gaps in between the top of a previous triangle into the next top before we have a decent crash, the average was 112 days starting from here. All of these right there, this one was 91, we have 132, we have 79, 60, 167, 175, 83, and 91. We're at around 91 days right now. We're at 90. Is that just one day? I think it's just 90. So we're at 92 days, right? 92 days. The average is 112 days. The average. Now, it doesn't mean it's going to hit 112. Here, we only hit 83. We're at 92. I wouldn't say the markets ran pretty heavy, but since September 2nd, about 3 weeks ago, we've gone up 7%. 7%. Now we have this little double, right? We got this double red candle here going. If we start seeing another one here, which I got to be honest, I think in my other portfolios, I'm going to hedge. I'm going to start getting a little bit ready for this. Because, I mean, when you just see this stretch, I mean, like I said, we went 7% just since September. We're up almost 11% since June of this year. You know? Now, again, that's not to say that, like, oh my God, that's so much, right? The stock markets have gone up 10, 15, 20% in a full year before. So if we were to hit another year of 20% gains, okay, well, hitting 10% since June isn't too crazy, right? Especially because we had this crash that kind of took out any kind of gains that we had to start the year, right? I don't even think we started the year with any kind of gains. It just really crashed in the beginning of February all the way into March. So, but ever since then, we've been on this run. Ever since that little crash, you can even look at it as, check this out. Since our bottom, we're up 46%. This is the NASDAQ, basically, right? The QQQ. It tracks the NASDAQ. Essentially, the NASDAQ is up 42%, 46% since April. Now, that is coming off a crash, right? It's coming off a heavy correction, crash type of, I mean, we're talking 25%, 24%, right? So it wasn't anything just a little gentle. No, it was a harsh one, and it was sharp. It went quick. It was within 47 days, a month and a half, we went down 25%. Pretty quick. But now we're up 46% in 170 days. I don't know. It just seems like we're getting a little overstretched. There has to be something to pull this back a little bit, right? Now, I did initially have this one as a marker. I thought we'd be going up till like mid-September, maybe when the Fed does their announcements, maybe they say something that people are a little wary of, and then we continue to go down into October and hit this spot in October to start October, and then we continue down into November. Now I'm starting, and I always said that if we hit the top part of this, the more up on this triangle we hit, the harder the crash is going to be, right? The harder the crash is going to be with the more outstretched we are. And so I still think that to be true. And so I do think we're going to crash now between at least a 7 to 10% over the next month and a half. I have it here as basically Halloween, where we bottom. I'm starting to now feel like I got to push that out. I'm already 9 days past what I thought was going to be the turning point, and it hasn't done that, right? I mean, it could have been yesterday. It could have been yesterday with the way it looks, but maybe not. So I might have to start stretching my bottom. No, Diddy. I have to stretch the Nah, I can't even say this correctly. I just think that the bottom of this market, the bottom of this correction, is now going to be mid-November to end of November. If this market is where it is today. Now, if the market continues to go up a little bit, if it bounces back, I'm not one to say, oh, I think the market has to crash. It's going to crash. We've gone through plenty of times where it doesn't crash. But I'm just saying, in between these triangles, which are 10% or more, right? We can go through a 10%. We're talking 112 days on average. And we are now at 92. We're talking 20 days, and then we're officially at the average. So I just, again, think that something has to give eventually. It doesn't mean that the market's going to crash forever and, oh my, everyone sell everything. Like, no, that's not what I'm at all saying. I do think there will be a correction. I think there'll be a scare. We have to remember who's in office. Who, the most tweeting, X posting, whatever, they're posting a lot. They create emotions. The stock market, I'll always say, is very emotional. I mean, it's the most emotional financial resource you have, right? I mean, there's not a lot of things that could be financially resourceful for you that are emotional. Like the stock market is emotional, and it's basically because you're dealing with a lot of humans. A lot of humans, even though there's now a lot of algo bots, right? A lot of algorithm, a lot of AI bots that are buying and selling based on this and that. It's still basing that off a lot of history that was based on human emotion. It's basing it off of, okay, what is happening with a stock right now? Why is it selling off, or is it going up? And that's probably also based on human emotion, because something happened and someone feels something. So again, I think the stock market is going to go somewhere down to the degree of 7 to 10%. I'm starting to think more now 10 to 12%, especially because I'm thinking 10 to 12% from the top that we had. What was that, yesterday, basically? I mean, the 22nd to 23rd, we were at, the Qs were at 600. They hit 600. I think that they will be in the 530s to 540s in November. Again, that's just what I think. Doesn't mean that's going to happen. But this is kind of like my little triangle that I think is going to form, Like, I think this is going to be a triangle that forms. Like you could see that happening. It doesn't seem out of the question by any means. All right, let's do that. All right. If I said, look at this stock chart in the future, you were to look back at that. That looks normal. That looks like a normal stock market chart, right? It looks like it's the same thing that's been happening over all these years, right? Now, again, you look at certain time periods. I mean, you look at 2013 to 2018. I mean, all the way to 2017, basically. You had 4 to 5 years of just absolute amazing returns. There was this little part end of 15 into 16. There's a little bit of a drop, right? 16% over 206 days. Obviously, we had a significant drop, but that's it. That was it. But other than that, there's typically some triangles everywhere, right? You got a triangle here, 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 here. You got these triangles, right? Now this is the .com, the 2001. This is when it got founded and integrated and all that stuff. So I'm not really counting any of that. But I mean, you look at these charts, right? You look at this chart, and you look at the triangles. You're like, okay, yeah, that seems like it makes sense. Like, that just seems like it makes sense. Seems like, what makes more sense? Here, let's go over this. Let's do this really quick. Let's see what makes more sense. This. Okay, I can't copy. Oh, dang it. What am I doing here? Shoot. All right. What makes more sense? This or that? I mean, I'll be honest. They both kind of make sense. Right? But 261 days in a Trump presidency is, guys, you have to understand that he's going to make things, like, he's fighting with the Fed. He's putting out policies that are crazy. There's immigration that does do stuff with the workforce. We got tariffs. I mean, we are not looking at an administration that makes things smooth. They don't want to make things smooth because they're not smooth. It's not a smooth transition. It's not a smooth transition to power at all, because we're talking about a totally different way of doing things. So to me, this seems a lot less likely. You know, even this, right? We could be here. Granted, we're talking right here, like let's say this. We're still November 2025. That's November. That's still a decent stretch, right? And it's November, and then we can come down. So I just don't think it's that crazy to think that this is going to happen. Whether it happens here or we push it back a month, but this triangle is going to form here. This triangle will form here eventually in the next month or two, and just be ready for it. I have some cash ready, and that's just what I'm thinking is going to happen. You know, so if you agree, you know, go ahead, give a like and subscribe if you agree. Give a comment, say I agree or I do not agree. This is stupid. Whatever you guys think, you know, whatever you guys think, give me your thoughts and opinions. You know, I'm just watching this market, and you know, my daughter, she loves strawberries, she loves fruit, and I've been, you know, I get them in the stock market. They have, you know, custodial accounts and stuff like that, and I talk to them, and I ask them, like, you know, Haley, you know, that's her name, you know, if the strawberries were on sale, now the strawberries didn't change, the taste didn't change, the farm didn't change, there's not like bugs all over them or anything, right? The quality of the strawberries is still the same. The store they're sold in, not as good. Same strawberries, but the overall store, not as well. But they're on sale. The strawberries on sale. All I have to do is tell her the fruit's on sale. She's like, get more, get it, right? You have to have that same mentality in the stock market, where when things are starting to crash, first of all, you don't want to sell. That would be like you being on the business side of things, saying, I want to sell more discounted strawberries than full price strawberries. That wouldn't even make sense. So what you want to do is buy, right? If you're going to go and sell strawberries eventually, right? Eventually you're going to sell these stocks. Then you want to buy at the discounted rate, not at the full rate. You don't want to buy at the full rate, sell at the discounted rate. That makes no sense. So again, I just think it's going to happen. And be ready, have a little bit of cash. We should always have a little bit of cash, but maybe build a little bit more of your cash, another extra % or two. Be like, hey, you know, I think something is going to... The thing is, though, too, it's going to happen every 5-6 months. You know, I mean, I said the average was 112 days. That's less than 4 months. You know, so every 4 months or so, we have a 10% drop. And you also have to think about that this is the NASDAQ, right? I'm looking at the QQQ. The NASDAQ, if the NASDAQ falls down, if the NASDAQ falls 10%, then individual stocks probably crash a little bit more. Because even though the NASDAQ is going to be heavily with the Amazon and the, you know, Nvidia and the Tesla and Apple and Microsoft, all these ones, right? And those are going to fall and bring it down to kind of match those. It's still going to have other stocks that perform better, that actually have gains still, right? So that's going to offset a little bit of those big gains off the top. And so what happens is the index falls 10%, but the individual stocks fall 12, 15, 17%. So that's your time, your chance, your opportunity to grab a couple individual stocks for cheap. That's just my opinion. So yeah, if you like this stuff, please give a like and subscribe. This is my new kind of format I'm trying here. You know, I'm kind of like being able to bounce back and forth and do this whole thing. I got my, you know, my top 10 stocks up there. You know, over here, that this is just, you know, on the Yahoo Finance, where I'm just, you know, I got my top 10. This is the last price. This is how much it's gone down in the last day. You know, so these are the ones I'm looking at. I'm going to put out a video about the top stocks to watch next month. I'm going to be changing these every so often. You know, these are just kind of the top 10 I'm looking at. A lot of these I own, so I'm going to have that in there. because I do believe a lot of stuff I own are going to be top 10. It doesn't mean I necessarily think these are the top 10 to buy, right? Alright, sorry. If I'm making you tired, I'm sorry. You probably want to click off this video already anyway. It's been 30 minutes or so. It's 12:30 for me a.m. Pacific time. I'll see you all later. But yeah, if you like this stuff, please give a like and subscribe. Comment any kind of stocks you know that have opportunity, because I'm trying to grow this thing from 7,300 all the way to 100,000. I need a few where I could put down 250, 500 bucks and get a good return off that, right? You know, I need a few high risk stocks to really make this work. But mostly I'm going to be dealing with fairly safe stock. Not too risky, but not too safe. Because if I go too safe, I'm not getting my 20% compounded annual growth rate, that's for sure. So anyways, thank you for watching, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.